Hi everyone, welcome to the Decentralized Voices podcast. My name is Daria and I'm excited to be joined by Niklas Kunkel, founder of Chronicle. In this episode, we'll discuss oracles and their business value for the Web3 industry, explore emerging trends, and share the story behind Chronicle. Stay with us for the full episode and follow Decentralized Voices on YouTube, Spotify, and Apple Podcasts. Nick, I'm happy to have you today. Please share a bit about your background, maybe some unexpected or non-obvious experiences.
Well, first, thank you for having me. I'm really looking forward to this. My name is Niklas Kunkel. Or Kunkel. I'm the founder of Chronicle. My background is kind of started at, believe it or not, at IBM. So very corporate, who were surprisingly early to crypto. They had really struggled with cloud, and so they were very motivated to be first when it came to crypto. And so they were actually quite far ahead of everyone else. To their credit, they recognized the potential of even like Ethereum. Now let's repeat that. Okay, 1, 2, 3. So my journey started at IBM, who, to their credit, were quite early to crypto. They had kind of messed up when it came to clouds versus their competitors, and so they were extremely motivated to be early and innovative on the next big thing. And so they identified crypto as kind of up and coming. And so this was 2014, 2015. And they had recognized the potential of Ethereum before Ethereum mainnet even went live. They were actually like, they understood everything quite well. But then when it came time to translate this into a kind of a business and into a product, right? They then said, okay, no, private chain is the way to make the most money out of this, right? And we all know that didn't work out so well. I ended up leaving to join MakerDAO. So I was part of the founding team of MakerDAO, was there for a long time. Actually, I think 2016, 2017, all the way to 21. So about 5 years. And then even my journey to Chronicle wasn't even leaving Maker and being Chronicle the next day. It was a rather smooth process because Maker was going through a transformation of decentralization. And so they were already looking to have kind of internal contributors to spin out and become kind of service providers for the DAO. And they thought that this was a much more scalable and resilient type of model for servicing a DAO. And so it was actually very organic to start Chronicle, to have Maker as our first customer, and then to scale Chronicle from there into more products, into more customer lines, into kind of a sustainable revenue generating entity.
Yeah, thank you. It sounds great and impressive. And for those new to Chronicle, how would you describe what it is and what the core problem it solves?
Chronicle is the leading kind of Oracle infrastructure. I think maybe your listeners, when they think of an Oracle, immediately their mind goes to like this thing that tells you the price of something. And I think
Prediction.
Yes. And I don't blame them for that, because for many, many years, right, this is the only thing in DeFi that oracles were being used for. But I think it's important to take a step back and acknowledge the real problem that oracles solve is that blockchains are like a black box. They don't have a native built-in way to obtain data outside of the blockchain, right? And so oracles fundamentally solve this data piping problem of being able to have applications consume data from outside of a chain, and that data has to come with certain guarantees. So data integrity guarantees, right? That the data is correct and hasn't been tampered with. And for example, data availability guarantees. You want to make sure that the data doesn't get censored, right, that it's going to keep flowing. And so this is like the fundamental problem that oracles really solve. And so as crypto has evolved, so have oracles quite significantly. I think the major impetus was the evolution of RWAs, or in more layman terms, right, tokenized assets. And what happened with tokenized assets, I think, is quite interesting because it was the first time where DeFi is trying to integrate this non-DeFi native token. And because it's not DeFi native, all of the information related to the token exists outside of the chain. And so this is really where oracles found like a new calling, because now oracles are really this critical infrastructure for bridging data about a tokenized asset on chain so that a DeFi protocol can safely and securely, in a responsible kind of risk managed way, integrate a tokenized asset. So that's really, like, in a nutshell, like how oracles, like, just in the past year have undergone like a radical transformation in terms of the value that they provide and in terms of how critical of a piece of infrastructure their footprint has kind of grown.
Wow, that sounds really interesting. And yeah, now you explained how oracles help RWAs be more transparent and like to grow actually and to develop this direction. I know that there is some interesting story behind Chronicle origin. Can you share this story and how Chronicle was found?
I mean, Chronicle started with me and 5 individuals from MakerDAO. And for a very long time, it was just us, and we were just servicing the Maker protocol. But Maker at the time was, I believe, had like 20 billion in TVL.
Wow.
So by default, right, we were securing even more assets than Chainlink, and this brought us a lot of attention and a lot of interest, right? And it was actually very natural to scale from there. I think one of the things that we did very differently that put us on the map was back in Ethereum and kind of the greater kind of alternative layer 1 community had not really solved the scalability problem yet. And this meant that gas prices and by proxy, right, transaction prices were extremely high. I remember there was an event, right, called Black Thursday in 2021. Black Thursday, we saw gas prices hit 7,000 Gwei.
Wow.
7,000 Gwei, to put this into perspective, means that one Oracle update costs 50,000 US 50. And so you can imagine a day of Oracle updates. Maker spent millions of dollars just that day, just to update the oracles during this market-wide panic. And so this was interesting because Maker was making hundreds of millions of dollars. So Maker was luckily one of the few people in this industry that could have afforded this. But what we saw is that many other oracles, right, just turned off. They did not have the funds to be able to update during that time. And so we saw this as a fundamental problem. And so the original like reason for Chronicle was more of a coming up with a unique Oracle product that could operate at scale. Right, that could operate in an environment of really hostile gas prices and no matter what, still be as cheap as possible. That was kind of the goal here. And so we came up with one really core innovation called Schnorr signatures. The cryptography for this at the time had been adopted into Bitcoin. So it was part of kind of this SegWit upgrade and the segregated witness upgrade that Bitcoin did a while back. So we knew that it operated, that it was kind of secure, right? It had kind of stood the test of time operating in a system of tens and hundreds of billions. So that was kind of like the go-ahead that we needed. Okay, this is not untested research, academic, experimental cryptography. No, this is battle-tested cryptography. But the way that we were using it was rather different. The oracles have historically had this fundamental trade-off in between cost and security. The way that this plays out is typically oracles are secured by validators. This is true for Chainlink, this is true for Chronicle, this is true for Redstone. For all of these oracle providers, almost all of them are secured by validators. And you can think of it as like a multi-sig. right? If a majority of the validators agree,
Yeah.
then that is the oracle price, right? That's the security model. And so if you have more validators, well, then the oracle is more secure, right? Because to manipulate or compromise the oracle, you would need to have more and more and more validators, right? Turn evil, turn
Yeah.
malicious, to collaborate to do an attack. But this is in direct conflict with cost, because the way an oracle update happens is each validator creates a signature. Typically, this is a ECDSA signature. It's a signature scheme used very widely, both in Ethereum and abroad. And so what you end up having is this one-to-one relationship of one validator, one signature, one verification on-chain for that signature, for that validator. So if you have 10 validators, 10 signatures, verifications on-chain for those 10 signatures. And so this is the problem. You want to have more validators to have more security, but you can't afford it. So either the oracle doesn't update very often, which is not a real solution, that's just a not very good oracle, or the oracle is very easy to compromise and manipulate, which is also not a very good oracle. And so what Schnorr signatures allowed us to do is turn this one-to-one relationship of validators to signatures into a many-to-one relationship. So you could have any number of validators collaborate to generate one Schnorr signature. And then this Schnorr signature could be verified in an oracle update on chain for a constant gas cost. So no matter if it's one validator or 100,000 validators, the cost to verify the signature, so the cost to update the oracle, is exactly the same. So that was kind of the core innovation, right? That put us on the map and kind of got us our initial, let's call it initial traction.
There are many oracles in the market now, like not many as L2s or DeFi projects, but anyway, we have Chainlink, Redstone, Pyth, and others. And what's the difference between all of them and including Chronicle? Like how people should use these oracles in their projects, or what should they know about their difference?
Absolutely. So the way that I would think of Chronicle is, one, we're battle tested. We've been around longer than anyone. When we were working at MakerDAO, right, we made the first oracle on Ethereum. This was before Chainlink was even a white paper. We were already live on Ethereum mainnet. When you're using a Chronicle oracle, right, you are literally using an oracle that has existed almost as long as Ethereum itself. Second, we are the second largest oracle in terms of value secured. We have over $11 billion of both crypto, primarily crypto assets that we secure. And even with tokenized assets, I believe within the next month, we should be the largest. We should have around 5 billion in TVL of RWAs and tokenized assets. Combining those two, we would be almost twice as big as some of our competitors like Redstone and Pyth. And I believe Chainlink would still be like twice, a little more than twice as big. But I believe Chainlink, right, is a company with probably 400 or 500 employees. With Chronicle, we're a scrappy team of 24, 25. So I really think we definitely punch above our weight. The team is basically exclusively veterans that have all worked together since the Maker days.
Yeah, thanks. But what the difference? Like, imagine I'm a project founder and I need the Oracle. How should I decide which one is the best for my project, for example?
Absolutely. So from a technology point of view, from a service, oracles have become quite commoditized, right? So if you need a oracle that gives you a price, or if you need oracles that give you a certain piece of data, right? Most oracle providers can give that to you. The only differentiator becomes, what is the security? How secure is this oracle? How much do you trust that it can't be compromised, both from a cryptographic hack or, from an operational hack? And so audits are one piece of this, but really, how much value does this oracle secure, right? It's a good measure of How much do other people trust this oracle versus trust another oracle? So I think that's a very relevant metric, right? And the other that we talked about, right, is Lindy. How long has this oracle never been hacked? Chronicle's never been hacked, and we've existed even longer than Chainlink. So I think the decision, if you're kind of security and risk-minded, right, is quite obvious.
Okay, got it. So security is the main point to decide which one to use, right? Or there
Absolutely.
more?
You have to think, right, that an oracle is the Achilles heel of any DeFi protocol. It's one of the most important decisions that they will ever make, because if they choose wrong, then there is an exploit. In a single block, your entire DeFi protocol can become insolvent, right? This decision, right? And it's one that most protocols don't take lightly.
Did you hear any myth or misunderstandings about oracles?
I think there's definitely wild variation in the amount of decentralization of different oracles. I think that is often overlooked. I think that the perception of decentralization as an important value as in the public narrative has decayed over the past couple of years, right? So if you look back at 2017, 2018, 2019, I think there was a very big focus on decentralization. And I think that's now subsided quite a bit. However, what I would say is that I don't think people really understand what is meant by decentralization. And so it might be better to rephrase it as an attack surface that your oracle has. How much risk is there that your oracle will, one, report a wrong value, or two, stop reporting values, right? Those can be equally problematic. You could have an oracle that maybe doesn't get compromised, but if it can't reach consensus and it turns off, your DeFi protocol that stays solvent by liquidating positions when they become too unhealthy, right, all of a sudden is not doing this rebalancing, right, and can also become insolvent, right? So those two properties are extremely important. And so I would kind of encourage people to, when they hear decentralization, right, think, okay, decentralization means the infrastructure that the oracle needs to run is distributed. It's not just run by that single oracle kind of labs entity, if you will. And what this means, right, is that you would be protected from a whole class of attacks where, let's say, there is a North Korean ransomware attack, and operationally your Oracle provider, right, gets compromised. Well, now you're kind of in a really tough position, right? And you're probably praying that the Oracle provider pays the ransom, right, and they don't get pwned by this hack, right? And it will have nothing to do with the fact that the DeFi protocol was insecure. No, the DeFi protocol was totally secure, right? There was no bug or flaw in their code. It just came down to they didn't do enough due diligence on the oracle they were using, right? And so they were susceptible to a class of attacks that a truly decentralized oracle would not be susceptible to. So with Chronicle, we have a very diverse validator network. And when I say diverse, I mean, we have entities like Infura, like Gitcoin, like Etherscan. You have DeFi risk curators like Stakehouse. You have institutions like Bitcoin Suisse, and many, many more. I believe we have around between 25 to 30 total validators, and we're still just adding more and more and more. But what this essentially means is if Chronicle, the company, were ever to get hacked, right, it doesn't matter. We don't have control over the Oracle protocol. As long as the validators are independently hosted and reporting, the Oracle will keep working.
Yeah.
That's what it means to be decentralized, right? It's not a magical keyword that you put in your marketing, right, to make your token look good, right? It's something that you really want baked into the architecture because it's a core feature of your product.
How do you think Oracle infrastructure will evolve as crypto becomes more mainstream and with more regulatory regulations around crypto. So what will happen with oracles?
I think it's going to be very promising for oracles. I think regulation is, when done right, can unlock an enormous amount of liquidity and distribution. And that's exactly what DeFi needs right now. DeFi has kind of always grown by using ETH and BTC as kind of its core value, right? As its core kind of collateral. And this allowed DeFi to reach a certain size. But with the growth of BTC and ETH kind of stagnating in recent years, right, it's meant that DeFi hasn't really grown as much either. Accepting traditional assets and the required regulatory reforms that are necessary for the introduction of those traditional tokenized assets is really the catalyst for what is going to take DeFi into the scale of trillions. But with that kind of introduction of tokenized assets, with those regulatory reforms will come compliance requirements. And I can tell you the regulators that we've talked to are actually quite excited about oracles. I don't think they quite understood the term oracle and really understood the value that they brought in a crypto capacity. But when you reorient their framing around what can an oracle do for the regulator, they get very excited. Because as a regulator, when you look at a company, when you look at what that company needs to report and how often they need to report, right, for a publicly traded company, right, for that has a publicly traded equity, it's quarterly filings, right? You have this whole circus around Tesla's reporting Q1 earnings and blah, blah, blah's reporting this, right?
Yeah.
And even beyond just earnings, right? They're reporting the material facts and changes affecting their business, right? They're reporting their entire balance sheet and liabilities, right? TradFi is at the speed of transparency of once per quarter. That's like the model with which they're operating on. And now you have an oracle which can give you this transparency that they're used to getting once per quarter and give it to you in real time. Every block you can check, that this bank is within its risk constraints, right? Every block you can check that this business is not bankrupt and that it's solvent, right? Every block you can check that this bond has been every month, right, every day, whatever cadence it is, right, all of those repayments have been coming in on time, and so there's been no one has defaulted. So from a regulatory perspective, they're incredibly excited, right, to start using this stuff. They're not the most technologically literate, so they don't have necessarily the systems in place to consume data at this frequency yet. It's baby steps, but they're very excited and they're open, right, to testing this out. How far away are we from there being bills, right, passed that enforce this? I mean, if you look at the Genius and Clarity bill, they're already setting the stage for this, at least in the US. So I would actually give the US quite a lot of credit. I think for many years they were behind. The amount of progress that they've managed to make in the last 6 to 12 months is astounding. They went from being maybe third or fourth in terms of progressive reform and regulations to absolutely being in the driver's seat. Close second, I would say, is Switzerland, who is quite funny, actually, because if you remember back in Cannes, right, beginning of July, there was a big announcement by Robinhood, right?
Yeah.
Robinhood would be offering tokenized equities.
Yeah.
And this was seen as a very big deal, right? And it is. If you look at Switzerland for many years already has let companies tokenize and issue tokenized stocks on a blockchain. If you are a company in Switzerland right now, you can have, 1% of your shares, 100% of your shares, it doesn't matter, issued on a blockchain. And anyone who is holding those tokenized shares, right, will have the same legal protections and rights as if they were holding the physical stock. It's one and the same. But these are the types of reforms, right, that are going to take many years to put in place. But I think it's a question of when, not if anymore. We've crossed the what in the startup world we call the valley of uncertainty, or some people call it the valley of death.
That's well.
This is now very much a certainty. This is happening. And it's just a question now of almost this game, this geopolitical game between different jurisdictions, right? Of how hungry are you, right, to be the home of crypto, right? The home of digital finance, right? And as soon as you have a few of these competing, the timetable moves from decades, right, to single-digit years. And I think that is now the path that we're on, and it's incredibly exciting.
Yeah. Yeah, I agree with you. And I see that as you described, and I perceive this like oracles now can give more transparency to like TradFi businesses or like CFI/DeFi, so someone in the middle. And oracles can give more this transparency and more add them more on chain, more benefit from on chain and from being like more transparent and decentralized. Thanks. And to continue this topic, I want to ask you about emerging trends in Web3 that excite you the most, like maybe some concepts that you're following now. So what can you share?
At the expense of beating a dead horse, I would say ZK. I think we've been talking about ZK for many, many years, but from a production capacity, it was kind of lagging. Nobody wanted to really be the guinea pig, right, that would really put, multi-billion dollars behind a ZK proof, right, and trust that. I think we're finally beyond that. And the second hurdle kind of became, well, for what? Well, I guess the word is scalability, right? And for what can you use zero knowledge proofs at their current level of scalability? And so, to give you an example, right, to interpolate this onto oracles need to update, right, as frequently as possible. The more an oracle updates, right, the more accurate of an oracle it is. But if an oracle update with Snore signatures costs, 10 cents, and with a ZK proof it costs $1, then the extra security you get from a ZK proof negated by the oracle update costing 10 times as much. So it's that original topic we touched on, right? Security versus cost kind of trade-off. But more recently, I should say consistently, zero knowledge proofs have been getting cheaper and cheaper and cheaper, both to generate a zero knowledge proof, right, which requires a significant amount of hardware.
Yeah.
And even if you have more hardware, right, it can still take an amount of time. And that time is, from an oracle perspective, is latency, right? It's like if the price changed on Binance and Coinbase, at this moment, how many seconds does it take for the oracle on-chain to be updated? And if it takes 20 seconds for the zero knowledge proof to be created, then great, you have a proof that is like, that tells you that this oracle update is true, it can't be manipulated, right? And it has the power of cryptography behind it, lovely. But it's telling you the price 20 seconds ago for a cost of 10 times the amount that it would have cost with very, very good validator security if you have enough validators, right? And so this was kind of like where the academic and theoretical capacities of zero knowledge proofs were not meeting the product requirements, right, to integrate them, at least from an oracle capacity, right? So oracles just have very, very strict requirements, right, of what we need, right? Cost, latency, and the like. But now this is starting to change. And it's starting to change, right, because of all the research that's been done on creating proofs It's starting to change because the hardware needed to create proofs is becoming cheaper and cheaper. It's starting to change because blockchains themselves have scaled, right? So with the addition of blobs, right, we have enormously efficient L2.
Yeah.
But even on the layer 1 side, even on the Ethereum side, right, we've seen now the gas limit, I believe this was a week or two ago, right, even be extended to, I might be getting the number wrong, but I believe it's 140 million gas. So we're both scaling on the L1 and on the L2 side, right, to finally start making ZK proofs more economical. And I think that's very exciting. Obviously, I'm biased. I'm very excited for Chronicle to integrate zero-knowledge proofs into our oracles, right, to make them better. But I'm even more just excited, just generally, how many doors are going to be opened up in our ability to create new products. There's a difference between someone at a hackathon creating something and using ZK proofs and it actually being like ready, for a product. I think now the door is kind of open to building products. And I think that's super cool. I'm a bit of a privacy nut. Some people are, some people aren't. But I think zero knowledge proofs are an excellent way to do privacy. You can do privacy without sacrificing compliance, right? I can prove, like, let's say I'm off-ramping to my crypto to a bank, right? And I would, not like my wallet address to be associated to the bank, right? I don't want to have to show them what is the source of wealth and show them all of the on-chain transactions of how I got this crypto so they can check that the crypto has not been, laundered or used for terrorist financing or received from a restricted person, right? I think those are all important from a compliance point of view. Zero knowledge proofs are kind of that missing bridge, right? We can give the compliance people kind of exactly what they want and what they need, right? Here is this proof to show my crypto is clean. I don't need to show you the entire backlog history of every transaction I've ever done, right? And I think that's it becomes much more difficult for, let's say, politicians or state level actors, right, to argue against privacy when it doesn't have any trade-offs when it comes to compliance. At that point, it just becomes a question of educating them that the math is flawless, right? That the cryptography is perfect, that this can't be faked.
I like the concept of ZK passport and self, how they use it. And actually, there are use cases of ZK that you can explain easily to your mom or to your neighbor how ZK proofs work and how you can benefit from using them, from using the products with ZK.
I might add, there's actually an existing Oracle provider called Keyring that specifically does this. They are trying to solve this, among other things, or trying to solve this problem of, right, that you brought up just now with KYC, right? Of you don't want to have to submit your passport or driver's license to every single, financial entity, right? That you want to use. And they allow you, right, to use existing KYC that you've done somewhere else, right, to create a zero knowledge proof, right, that you can then almost use as this digital KYC passport. So would highly recommend looking into them. I'm an angel investor, very, very small amount, right? So I'm a little bit biased, but not so much, right, that I'm incentivized to shield these guys. I think it's legitimately very, very cool. I think more privacy, protecting your personal information in the age of AI is just going to become more and more and more important.
Let's talk about your leadership style. What core principles guide your leadership and decision making at Chronicle? Can you share your approach?
I will say there's different approaches. My approach is it starts with hiring. You just hire the best people. You hire the best people, and this is easier said than done. It's very difficult to find the right people who are both technically qualified, but more importantly, have the right attitude, who will fit into the working style. So 1, hire the right people. Step 2, get out of their way. Let them do what they do best. You hire them because they are much better than you at doing this, and so you can ask for their reasoning. Why are you doing it this way? Did you consider this other way? You can probe, but ultimately don't micromanage them, stay out of their way. The third thing I would say is create processes. And the only way your business can scale is if you create an end-to-end process from customer discovery to onboarding to integration to service delivery to monitoring and alerting to billing. Like the entire pipeline needs to be 1, formalized, but 2, automated. That formalization and automation, right, is critical to getting your business to scale, because at a certain level of maturity, right, you have like an initial, what you call infant phase of a company, which is, okay, we have no money, we need to build this product, we need to get product market fit, right? And then if we get enough product market fit and attention, right, then you can raise a little bit of investor money, and then like, okay, fine. Maybe that stage is a little bit more chaotic. But then you get to the next stage, right, which is, I have product market fit, right? I have a market, it's a good market, it's growing, right? I have customers, the customers have money to pay me, right? And at that point, for better or worse, you start to look at margins, right? And this is right, if you have better margins than your competitor, right? 1, this means you can potentially make your product cheaper, right? So you can have a cheaper product than your competitor, so you can undercut them and you can grow quicker, right? Or if you have better margins, right, you can build up a treasury and then redeploy those resources, right, into more growth opportunities, right? So it's not just about winning the customer and getting the business. It's about being aware of how much does it cost you to do an integration, right? And how can you reduce those costs? What are the points of friction there? And that's what separates like a good business from a great business, right? Do you have, take a restaurant for an example. Restaurants have terrible margins, guarantees with respect to if you create a restaurant, some number of people will at least come and check out your restaurant and maybe try it, right? Which you don't have with a software company. But a restaurant will never have as good of a margin as a software company. And so this is kind of the difference maker, right? Is how good can you get your margins, right, while still being able to grow. You could have a business, right, that has great product market fit, but nobody is willing to pay you the amount that it costs you to serve them, right? And at that point, you don't have a business. You have a charity. You have a hobby, and a very expensive hobby. A business means you have to charge more than it costs you, right? This is a very rude awakening for not just in crypto, but startups generally, but especially in crypto, where
with cheap money
sustainability
from investors.
Exactly. You can fake it for a little while, where you just raise money from investors and you use that investor money, right? But eventually, you need to be profitable. That's a step that most don't make, and as a founder, you need to start thinking about that very early.
Actually, you answered my last question about your advice to aspiring builders and founders. So maybe you can add something more to that you already shared.
I'm an engineer by trade, right? That's what I studied. I'm a total nerd. I think what technical founders sometimes get wrong is they underestimate the necessity of marketing and BD, right? I think the colloquial phrase here is, if you build it, they will come.
No.
This is nonsense. This is complete nonsense. So my first piece of advice, right, is don't just build a team of 8 engineers and no marketing or salespeople and think that, oh, you as the founder will just do some tweets, schedule some calls with your potential customers, and that's how you're going to build this business. That's not how that works. Marketing branding, sales. These are essential functions that you need to build up. And likely with a technical background, you don't have the expertise in. So start early, get those people. The second thing is shipping. I think the phrase is what? Always be shipping. Always be shipping. Don't try to make things perfect. You want to validate your product market fit as early as possible. And that means not just intuitively thinking, oh, what do customers want? Or even a step further, right? Doing a survey and talking to customers, say, okay, customers want this. Customers say a lot of things. Get the product, put the product out there, and then see if anyone uses it. That's the only metric that matters. And if they don't use it, now you can go and try to figure out, okay, why are they not using it? What do I need to change? Fine. The trap here is never shipping. The opposite of always be shipping is never shipping. Never shipping because the product is not quite perfect. It's not quite how you want it. It's not as smooth as yet as you imagined. There's still like some problems you're trying to deal with, and then not shipping. That is the worst. You're all up in your head, like, so ship early, ship often, validate not by your customers' words, but by their actions. Are they using you? Are they staying with you? Right? Those are the only metrics that matter.
I agree with you, and thanks for your pieces of advice. And I'm sure that for many people, they will be valuable. And yeah, thank you very much for this episode. It was a pleasure to have you on Decentralized Voices. So, guys, I'll leave all the links under this episode so we can follow Nick and learn more about Chronicle and Oracle's infrastructure in Web3. Thanks again, and see you in the next episode.